Okay, folks, welcome to Thursday Night Stock Charts Live. You caught me unprepared with my microphone. Uh, what we're going to be talking about tonight is are the earnings out of Amazon and Apple. We're going to talk about economic data. We're going to talk about the Fed's balance every Thursday night. We're going to talk also, which is what we do Thursday night, the weekly charts. And we're going to take some members' stock chart requests. We're going to go to 7 p.m. And if we have time, we're going to take some requests from the audience. If you're not currently thinking about joining up, 14-day free trial offer, become a member too. Variant Trader. I hope you love my background. Happy Halloween. And I'm psyched about tonight. Let's get to it. Before we begin, let's do a screen share. That'd be nice. And let's talk about our sponsor being the people over at TrendSpider. Folks, automate your grunt work. Speed up your technical analysis by using artificial intelligence. You got to start using it. It's here. The institutions have been using it for years, being priced for the retail trade. If you're not currently a subscriber to TrendSpider, they have a 7-day free trial offer. Give it away free for 14 days with silver and gold level memberships. Either way, use the low. Take advantage of our 35% discount code with them. So don't hesitate. Use their scanning software, their trade alert functionality. It's software, so please take advantage. Link below. Let's get to the comments. Let's say hello to people. If the background's getting in the way, the Halloween background, let me know. And we'll get Paul. Hello. How are you tonight, sir? Who else do we have on here? And McNeil. How are you, sir? Happy Halloween. RB. Hi, Bob. Any opinion on shorting SPY? I think tomorrow is going to be the tail of the tape. Right now, absent the Apple and Amazon earnings, I would say no. I've been on the short side for not of the spiders, to be fair, but I've been short of the small caps and not heavy on the Qs. Haven't added to the IWM short in a while. So I'm frankly not looking to do so right now, but we'll see how this week pans out. And frankly, something I'm going to show you in a moment on the Federal Reserve's balance sheet may just sway our opinion if we see the correlation, which has existed for quite some time, meaning the rise in the Fed's balance sheet along with the S&P 500. When we get its balance sheet, generally the S&P 500 pulls back as well. I'm going to go over a chart for you in a moment, actually their balance sheet, and we'll talk about it more there. Talon, how are you, sir? Abel, the great Abel. Chris, hey, Bob, can you look at BIGC? If I have time, my friend, I will. I need to go over members first and what do they call them? Super chats. But if I have time, I definitely will. We're going to go to 7 o'clock tonight. Very well in South Florida. You're rubbing it in. It's pretty here in New York right now. I have to say that. Very pretty. I like this time of the year. As a kid, I didn't like it because we were back to school. Hated it. Now that I'm getting a little bit older, not too much older, but it's pretty here, really pretty here. It's finally starting to feel fall-ish. Okay, let's take this again before I leave. 35% discount code TrendSpider. Use the link below. Take advantage of it. Oh, their app is the bomb. Really, really cool. I use it. So take advantage. TrendSpider. Okay. So after hours, we're going to go to the charts after hours in a moment. And we're also going to go over the charts of Amazon and Apple to see what the market has been telling us for a while about both of these. And Amazon is kind of surprising. I'll tease it We'll go to the monthly chart in a moment. I'm teasing it. Stick around, like, subscribe. But their earnings, Amazon's anyway, not good. Not good at all. I mean, Bezos got out of that CEO chair right on time. He knew it was coming down the pike. So in short, long story short, expenses higher, right? The only other problem is that they don't have goods. They're having supply chain constraints. Remember all those boats, ships docked off of, not docked, that are floating off of the California coast? That's a problem. They need those goods to come into the United States. What bailed them out is Amazon Web Services. What's Amazon Web Services? Right here. The cloud. The cloud. Very profitable business for them. They were at the forefront. But I got to be honest with you. Microsoft has begun to eat their lunch. And then Microsoft has already eaten Google's lunch. So that came Google's earnings, their cloud services down, Microsoft's up, but Amazon's still going strong with Amazon services, but their retail business under pressure, under a lot of pressure. Apple plunges, and here we go again, folks. Supply chain constraints. Apple plunges after first revenue miss in 4 years, warns of $6 billion in supply constraints. $6 billion is nothing to them. I'm not sure what they mean by that. I'll figure it out later on. I didn't go over these numbers yet, so I just want to digest really quick. Q4 iPhone revenue missed, and they just came out with the new iPhone. Mac revenue is always wonky. Okay, so the only thing that beat was iPad, and that couldn't be a huge expectation. So not good. iPhone, well, I don't want to say it's in a downtrend because we started putting higher lows and higher highs on iPhone. iPad has been creeping back up. Mac creeping back up. But let's face it, these are all net since 2010 flatlined, with iPad losing a lot of momentum. Wearables beginning to poke higher. It's fairly a new category for them. Okay, let's look at this business. This is where they switched their business to, the services. So Amazon services doing very, very well. This is a revenue chart. Revenue growth year over year. Saw a drop on revenue growth services for the September quarter. China booming. The Americas includes Canada and South America, Central America. So America, states of America, relative to China, not big market relative to. Well, yeah, relative to. It's still a big market. Okay, we got the feel here. Apple under pressure, Amazon under pressure. A lot of this goes back to supply chain constraints. Let's take a quick peek at the after hours price action. First, we're going to kick it off with the futures. In fact, let's get rid of the background. Where is it? Let's get rid of this. Pop. All right, that's better. Now you can see my ugly face. Talon, Bob, what do you think about Canada and Brazil rate hikes? I don't know about Canada. I took a look at the chart of Brazil today. Brazil appears to be bottoming out on that their rate hikes. Have they hiked rates, or are they talking about NYG? It's news for the market. Yeah, you saw that today. The GDP numbers. Hey, Bo. Yeah. I bought analysis of NovoCure, NVCR, NovoCure. Hey, Bo. Got it, pal. All right. Let's take a look. So these are the NASDAQ futures, the minis. And they're down about half a percentage point. Let's take a look at Apple. So Apple's chart, this is only a 15-minute chart, short time frame. As it stands right now, we'll be holding a decent support level at 147 per share. Whereas Amazon is a bit more concerning. We've had a dead cat bounce here. What I think that this is just that is what's going on here. There we go. Is a bear. I think this breaks. We're already beginning to see a little bit of pressure on it, and we head lower. There you have it. Starting to break now already. Let's set up an alert here. See if we break support. Not a lot of volume. Okay. Okay. So both of these stocks obviously under a great deal of pressure. I can't see how this doesn't put pressure on the Qs tomorrow morning. The S&P 500. I think it all depends upon yields tomorrow. If yields pump up high, optimistic economic data, the banks move up, transports maybe move up higher. That was the S&P 500. But if you get yields rolling over at a concern that the economy's slowing, that's a problem. That's a problem. Because you aren't going to save a pullback yields. It's to save the Qs right now. If Amazon to break down in earnest, so it's going to be a critical day. But Mike is in and out. My son was just telling me that I'm not web issues. He's having interweb issues. I had some issues earlier. I think it's my connectivity. Yeah, Paul, you hear? I don't know what to do. Don't know what to do. Mike is in and out. I noticed that as well. I think it's your bandwidth. All right. I don't want to. If it gets too bad, just let me know. I don't right now. I'm not using my typical software where I can monitor the sound all that well. We will live. We will live. There you go. Okay. Max, Max Headroom. Wow. You're from my generation. I know who that is. Okay. Let's scroll through some issues that are going on with this market. It's rally today, and that's because of the separate auction was horrible, really bad, and it forced yields up higher. They, institutions want to get paid more money because of the nuttiness of what's going on in this country. There's this moronic idiocy that we are living through. Their confidence is eroding and eroding quick. Also, you had GDP, which came out. The Atlanta Federal Reserve, as a matter of fact, this is the Atlanta Federal Reserve here. They put a forecast. Oh, it's horrible. They put out a forecast. It's GDP now. GDP now. If you go to their website, GDP, and oh yeah, right here, GDP now, and they began tracking this quarter several months ago, and they were up at what, some crazy number, and I think I started tracking it around 6%. Their last read was at 0% on GDP. So you got to think about it this way, right? You have GDP, which is slowing and slowing dramatically. And you had yields today, which bar off of the 1.52 mark, so on the 10-year. So inflation on the rise and only going higher because of supply chain constraints. You saw it with Apple, you saw it with Amazon, the most recent story. You're starting to see some go into now, but it's going to take a long time to unclog this mess. All the while, economy is slowing. People can't sell stuff, producing it here. We can't import it from shore. We are a banana republic. All we do is print money and spend it. We're giving out IOUs around the world for a promise to, for those that are familiar with Popeye, the Wimpy, I promise to pay you tomorrow for a hamburger today. That's what we're doing here. That's why bond auctions are beginning to stink, because other institutions solve more money out of us. We're not the America of. Hey Bob, can you revisit WGO? It broke out. If we have time, Seymour, I will. Yeah, max headroom brings you back. Yeah. Okay. Oh, NY Jets, you're 56. You're a lot older than me. Going to what my age is. I don't want to embarrass you. No, we're in the same ballpark. Okay. It seems like yesterday, though, right? The 80s, good decade. Good decade. Good. Okay. So GDP slowing, could quite possibly go order. Yields going up higher along with prices, folks. It's called stagflation. Then you take a look at the Federal Reserve's balance sheet, and you overlay the S&P 500 over this chart, tick for tick. The only thing different this week is that, and it may change by tomorrow, is that we saw a decline this week in the Fed's balance sheet, yet the S&P 500 has gone up higher. How we end off the week, it's going to be an interesting day tomorrow. A lot of headwinds just appear. The shares of Apple are the second largest component of the largest being Microsoft, still looking pretty strong. Amazon is up there, but it's a distant third, fourth on the Tues in terms of position size. Talent, early 40s here. Enjoyment, especially if you're young kids. Enjoy the hell out of it. I feel like 35. Hey, I'm at the gym 6 o'clock in the morning. Feel good. My wife says I have like a 2-year-old, literally. I think that's being inconsiderate to 2-year-olds. So yeah, you got to stay active. That's all. Stay active. Keep the mind going, body going. All good. We'll be here another 56 years. Okay. So Fed's balance sheet is and that's not good. So let's take a look. I mean, for us not to have more debt, but it's only going up higher. The problem is that if they taper, the economy slows, stock market, you know how much more they're going to have to pump to get back to where we were? $120 billion a month in mortgage backed and treasuries. It's going to be a drop in the bucket. You have the law of diminishing returns. They're going to have to double that up to get back from the troughs of wherever we land at to get pumped back up yet again. And it doesn't get reappointed. I mean, I don't know what they're going to put in that chair. With all good intentions, he's halfway sane, but they've been plucking away the Hawks and Suns as well. There's only one left in the Federal Reserve, and if they put a in Powell's chair, I mean, forget about taper. It's not going to happen. So, but there goes the dollar. And the dollar. Let's go to the weekly charts. Okay. Let's. What we like to do here is go over the weekly chart to get a feel for how we may out the week. Remember, one trading day left to go, and a lot can happen. And every Saturday, the weekend commentary with membership on all these charts. However, they're closed or in the books, and that way we can formulate a strategy. There's always a chart or two, and it's like, wow, look at how this looked on Thursday night, and look at how it closed out the week. Always. So we want to keep an open mind. So economic data. Consumer confidence, beat. Inflationary. Durable goods, missed. Negative number was expected. We got a less worse number. So I guess we beat on durable goods, which came in negative. Trade goods, ripping. Initial jobless claims today, good. Client, good to see people not losing jobs as much. It's always great to see. GDP. They had expected 2%, actual 2%. We missed on GDP. Inventory on pending home sales drying up. They expected a rise. They got negative. Tomorrow, disposable income, consumer spending, core inflation. Look out for that. Employment cost index, watch out for that. That's inflationary. UMISH consumer sentiment index, and 5-year inflation expectations final. Wait a minute. Read was for 2.8%. We're running it at the admitted CPI number of 5.6. That's the import-export prices were a lot higher. So having 2.8% inflation projected over 5 years. Good luck. Okay, let's get to the charts. If you want to become a member of your channel, well, click subscribe. If you want to become a member of the Contrarian Trader, use the link below. Special down there, I think, too, and every trial offer. Or if you watch this on YouTube, which it looks like you are, go in the dictionary. It'll take you over. Send me up, okay? Because we made some changes, and I want to make sure you're aware of them. Houses going up everywhere here in Florida. 1-year wait pool. Yeah, I should have pulled the trigger in Florida in 2009. All right. Okay. Let's talk week charts. Why is my... You got to be kidding me. The battery on my... Sorry, folks. Now it's just died. Perfect timing. Please, oh, please, oh, please, oh, please, please work. There we go. Okay. Quick battery swap. We're good to go. All right. The weekly chart. We are down on the week significantly. We remember last week we tried to break out. We were rejected, and we broke to new weekly low. Tomorrow's going to be an important day. So the question here with the bond market is, bond traders pay attention to inflation is up higher, or do they focus on a slowing economy as noted by today's GDP? This chart here is uber significant, and we've been in this trading range. You know, if it weren't for COVID, we would be in this trading range since mid-2019. You know, you X out COVID, forget that this is here, this line. We've been in this trading range for 3 years. Think about it. So breakout, that's ultra significant. If we break down, ultra significant. Right now, nobody knows. TLT, 20-year bond ETF, we bought this week. Will we close that? Left to go. Volume is probably going to be a bit light. Let's see what it did today. Down on the day, but still a healthy week. Volume was high today. So it's going to be a really important day for bonds. The tips, tips, Treasury inflation protected securities. We hit new all-time highs this week. We have backed off on the week. For those folks not familiar with what a tip is, it's a bond issued by the Treasury. You can buy an ETF as well. That gives you an inflation hedge. Big volume. Lots of institutional accumulation. Did see some selling today due to the fact that it's up higher. Daily chart. We got extended. We backed off. No great shock. Big volume today. But all week long, passing some serious good volume into this. Money's flowing in. As for the dollar, hopefully this is updated by now. This is yesterday's price action, 28th. Yeah, it updated. Good. Bad price action here. We were up as of last night. Today, bearish key reversal bar on the week. Is under a lot of pressure here. We now have new weekly lows. MACD may go negative. Daily chart. Brutal day for the dollar. It's going lower. And you would have thought that this would have been great for bond and the mining stocks. It wasn't. Why? Yields moved up higher. But the thing is, remember, and eventually traders are going to get this. Despite the fact yields could go right now to 3% on the 10-year, you're still going to have negative yields adjusted for inflation and taxes. As long as you have inflation, you made a negative yield on the 10. The VIX, we're up on the week, close to being a formation. sign of indecision, possible trend reversal, daily down day today. Jury's out. Wouldn't want to make the call one way or the other. But when the VIX is low, and it's still low, you got to go. You got to start thinking about booking some profits. When the VIX is high, like up here, you got to buy. The Dow Transports, weekly chart. A great week. Descend on a tear for the entire month. As a matter of fact, tomorrow is the last day of the month. That's this month went. Daily chart. I mean, today was very because yesterday we had a big sell-off, and we knew this was going to happen. Hopping action. I mean, we had about 8 consecutive days of rising price action on the transports, leaning up and above the 2 standard deviation Bollinger Band. You had to get a pullback, and we got the pullback. But today, good day, good day. So there's a market that's still, bad news is good news. Somebody said it earlier. That's very, very true. Bad news is good news. You got that bad economic data. Well, people just think the Fed's going to be there to provide liquidity. They're going to backstop the market until they're not. The Dow Jones weekly chart up on the week. Light volume so far. The S&P 500 new all-time highs. Let's put up a line here. I want to not we close above this 40 mark, the previous high. Do we above that resistance level, or do we fade on the week? Because that would be pretty bearish if we do that. Let's go to a daily. This is not a daily chart. This is a daily chart. Really rock solid day today. Volume was very good. Stokes look good. We're losing momentum on MACD. You get a day like this, a continuation move up higher, volume, and your MACD just is flatlining. You're losing momentum here. RSI still looks good. We fail. Push above 70 on the S&P 500 if we don't. Tomorrow's going to be an important day. No doubt about it. Weekly chart. We're breakout from last week. We did a retest. We jacked back up. Volume better than last week's, but very light. Daily chart. Big reversal bar today to recapture a resistance level just shy of another resistance level at around 228.78 on the IWM. Volume rose versus recent up volume bars, but still below the Qs. All eyes going to be on the Qs tomorrow. Weekly chart up nearly 2.75%. Volume light, but rose versus last week's. Daily chart. A breakout today. New all-time highs. RSI rising. Stokes rising. Looks good. It looks very, very good. Do we recover tomorrow? The banks. So the banks very important right now. I'm going to make an assumption that the Tues are tomorrow. Technology under pressure. So if you want the S&P 500 to make new higher highs, you got to have the banks. And the banks on the week so far are not looking, they're down about a half percentage point on the week, but yields moved up higher today. That's good for the banks. So you may see into the banks and out of tech. That's not what I wanted. That's what I wanted. Yeah. So today you had an inside bar, no new high, no new low. So it looks as though, if anything, money will come out of technology tomorrow, at least the mega tech, and will probably find its way to the banks. If it doesn't, then the S&P 500. Technology, weekly chart, we're at the upper band of the rising channel. Keep that in mind. Horrible, horrible volume. Let's go to a daily chart. Before we leave here, you might be saying, what does volume matter if you're new to trading? Volume indicates whether or not you have institutional demand. Mom and pop buying 100 shares of Apple or Goldman Sachs that pushes the market up higher. It's your institutions. And you can keep the market moving up higher, an algorithmic manipulation of the market and the retail investor. But all of a sudden, when the music stops and you have no more institution and the computers aren't willing to keep hitting the bid, there's a problem. So aware of this. Yeah, my internet is so slow. Technology today, new all-time highs. Stokes look like they go up higher. RSI, this is looking good. The only problem is volume. Volume is no good. Weekly chart. I rebooted and your voice is still skipped. Max Headroom style is commented above. Very good. Yes, I messed as well, but Bob keeps in and out of dialogue. Sorry. I'm sorry. Talon, here's some support. Here we go. Okay, guys, I'm Sergeant at Arms this week. Smash the button. Yes, please smash the like button. Thank you. All right. What else do we have here? Biotech. Biotechs are good this week. We've been consolidating here. I'm starting to warm up to the biotechs. Good volume. Ooh, biotechs. Interesting. Chart. Oh, beautiful day today. Big reversal bar. RSI rising. Stokes rising. Good stuff. I like energy. Barely holding support. If economic data continues to weaken, energy is going to have a problem. Daily chart. A reversal day today. Volume was light, though. Jury's out on energy. Natural gas, weekly chart, faded on the week. A little bit of top action. Avoid. Oil, weekly chart. Reversal bar on oil this week. We engulfed last week's price action. Let's go to a daily chart. Bar off the 20-day moving average today. You bid here, and proceed up again. If economic data gets up, it's going to be a problem for oil. Pat. Hey, Pat. Bob, nice trade on DWAC. Yeah, we did pretty good. Okay. The reason why we sold it, I can talk about it in a little while. We did about 20 that trade. I'd expected when I entered that trade. This is the second trade with WAC. I had expected. Let's bring up the chart so we have some. I had expected it to come back down here. We bought right here. Here. And we had expected a filling of the gap. In fact, I have an analytic view of this. Simple chart. So we poorly. I guess it was just the other day. I wanted to see a filling of the gap down here. I wanted to buy more, and we didn't get it. So we had a nice move there, and I think that we could still get a pullback here and a filling of the gap at around $45 in that neighborhood. If we get that, I'll be back in. I had hoped it would continue to pull back. It just didn't. It started moving, and I just couldn't rationalize staying long with a 27% profit when it didn't do what I do. So I said, you know what? I'm raising capital here and doing the right thing and waiting. Pat made money, scalps, PROG, DBGI. Good for you, Pat. You always do good. Good for you. Why am I breaking up? I don't know. I don't know. It's the interweb. It's those damn Chinese communists. I don't like those communists. Listen up our show. We're a threat. All right. Emerging markets. Down on the week. I don't like emerging markets unless the dollar really went up a lot more. Daily do today, light of a weak U.S. dollar, bullish reversal bar. All right, so now it becomes interesting. Dollar week is good for emerging markets. Let's talk about gold. All right, so gold is consolidating. I mean, the break in the U.S. dollar up higher today. In fact, it was up higher, over $10 at one point. But that bond auction happened, and no bueno for gold. You know, it's still up on the week. It's looking good here. I wouldn't be the least bit surprised to see it up higher. I would love to see it close above 1,800. We were there earlier in the week, but we could up as high as 1,812. Just couldn't hold it. All right, let's segue over and into some charts. I got to check the members area, make sure I got everybody. Sometimes we have some stragglers. All right, let's go over the longer term charts of on Amazon. Frankly, you got Six Flags on here. Robert has Visa. Apple. AMZN. All right, if we have time, I got to log off at 7 o'clock tonight. I will back and I'll pick up everybody else's. I got Abel's. And we're good to go. Let's do this. Again, folks, we're going to be using TrendSpider, our sponsor, 35% discount code below. Artificial intelligence. Make it a part of your trading strategy. So Amazon, here's what's so interesting about Amazon. You know what Amazon's done for the past year? Nothing. Absolutely nothing. It's just bounced around. The question is this a rounding top? We did get out at one point to a new all-time high. That was back, I think that was July, right? Yeah, July. And we pulled back. It's going to be interesting to see this, whether or not, because remember last month we had a bearish key reversal bar, very bearish month. We broke through not one support level, not two support levels, but levels. And this month we've recaptured two of them. Do we hold it? One trading day left to go. Let's check out seasonality. November is a pretty good month, up 80% of the times going back 2016. Let's check out the week. Is usually a good week. Next week as well. The week following is probably one of the worst weeks of the year. So expect some choppy price action on Apple. I just want to get a feel for the monthly to see markets were sending us a signal, and really no signal here. I mean, we're breaking out. We're very close to a new all-time high. Apple. September was an all-time high, but just like with Amazon, we had a bearish key reversal bar last month. Do we get that yet again, or at least a fade? Do we give up these support levels which we recaptured? Checking with seasonality, we are here. This is a weekly view. So week 4, which is what we're in. Next week is pretty good, but the following week, just like with Amazon, is very price action. Let's go to a monthly view. November, okay month. It's usually up. Certainly not the best of the month. July, oddly enough, July and August, the best months out of the year for Apple. Interesting. Okay. Let's NVCR, Able. Monthly view first. All right, so here's the value of the automated trend lines. Click of a button. Enable. What we did, I don't know if it was today or sometime this week, we hit the monthly support level at 99.71. What was the low? Low of the week was $100 per share to the penny. So that's where your support level is. You may get an overshoot. Watch out for this support level down here at 87.58. And then that would be interesting. If we touch this support level, I'm good here. I'm going to weekly chart. Let's go to the and what I'm going to do on the weekly chart, I'm going to overlay those monthly support levels onto the weekly chart. So here is support that we tapped this week, but here in dash are the monthly overlaid support levels on top of a weekly chart. This is where alert. So this is a note to self. What I would love to see here is a overshoot to the downside, meaning this support level here, which we bounced off week, breaks, and we go all the way down here to at or around $87, $88 per share. And buyers move, bid it back up, and it closes out the week above $100 per share. That's a signal. Folks are very oversold on a weekly time frame. Let's go to a daily chart. Here's that monthly support. We hit it today. We gap down today. Let's overlay weekly support. Oops, wrong. Daily. That's all. Yeah, that helps. So there's support down there. There's our alert set. We're good to go. I don't like the daily time frame. No rush here. No rush whatsoever. The ideal situation is a bounce off of this support level here, then a reversal, recapture $100 share. I don't know how much data there is seasonally. Not much. Data only goes back to mid-teen. November is by far the best month out of the year. By far. But just keep in mind, this data only goes back to teen, so it's thin. All right, moving on to Visa. Wow. Woo-wee. Okay. Visa is in big trouble. So we have a monthly chart. A outside reversal month. We've broken multiple. We have trend lines off. These are my manually drawn ones here. Throw them back on. Complete trend lines. This is the algorithm. And you can see that we held it last month. This month failed. We're going lower. Weekly, we're going lower. This is a chart. Daily chart. Look at it. Look at these support levels we broke. Stokes lower high, down below. Yet at some point in time, a rally back here. It's going to be a head fake rally. Don't get lured, because what's happening is that they're flirting with the 30 deviation Bollinger Band, and at some point in time, you're going to have traders move in and buy that signal. It's not going to last. You're going to rally back up to one of these resistance levels, and then stall. It's going to roll over. You're going to make new lower lows. I would avoid this stock. Any rally, I would be looking to short it. This downtrend is sustainable. We're going to get a rally back fairly soon. Let's go to a 4-hour chart. Big volume still. A lot of institutions. I'm liking this here. 201.81, if you want to jot down that number, 201 for a counter trend rally on Visa. I'm going to entertain doing a bull call spread. That's a purchase of an in-the-money call, and to finance that trade, the sale out of a call option. It's your upside, but it also helps finance the risk. So that's always a good thing. Our alert is set. For those that are interested, and yes, you get alerts to your phone with TrendSpider. Can't do this. This is going to take way too long. Okay. Close that. Okay. Let's take a look at Six Flags. I haven't looked at this one in a while, so I need to get updated. Avoid it. So we have distance up here. We broke down below it, rallied back, and this is a classic bear flag setup. Right? You break down, rally back, everybody gets all excited. New bull market, reversal bar breaks down. I think we're going to down here. We're going to retest this prior resistance level, which should now act as support. The problem is it's declining. So every time we bounce off of it, the next lower low takes us back down to retest that support level. Chart. Bad. I mean, this is a break of that bear we just spoke about. This stock is in a lot of trouble. Daily chart. All right, so they're picking up. This is the automated trend line, the algorithm. Click of a button. Here is your alert. I don't know what the short interest is. That's the only way I would trade this if there was a heavy short interest. Maybe you get a short covering rally on a good market. It's not attractive. I mean, all your momentum indicators are going in the wrong direction. I would avoid it. Even as term trade. I don't like it. What else do we have? What time do we got? 2 minutes to go. All right, we'll do that. BI, and we'll leave it off with that. Commerce. Oh, I haven't looked at this in a while. Big commerce. Avoid. It looks like you break into new lower lows. You break 42.40, it's going a lot lower. Weekly chart. Downtrend is clear and defined. You may bounce soon, not right now. I think we're going lower next week. I wouldn't buy it. Not at support. Your Stokes are a mess. Good volume today, I'll give you that. But we did off the highs of the day, I would avoid. Take care, Pat. Have a good night, Pat. Westlaw. It is better to sell rebound, dead cat bounce. No doubt about it. Agreed. All right, everyone. Happy Halloween. Let me do this. Is this it?